and there are a lot of fallacies with the final algorithm written and layered upon relay. To begin with, let me start with this video will probably be made of multiple segments recorded at different times. The process of explaining this entire approach is quite lengthy compared to the actual code itself. The irony is, once you get the code down and you actually look at the code, it's very simple compared to building it. So without getting into any more esoterics, let's get into the actual visual display of equilibrium. Now you will notice right away this has the resemblance of a grid type system. And in fact, it is really part grid, part savings account. The Jackrabbit TV savings account is the least efficient with funds monetarily, but the most efficient with profits. I wanted to build something to capitalize on that efficiency without running into the issues of being channel locked. This is the fruits of that work, and it has cost a lot to get this far. This system is very deceptive in how complicated it is with respect to how easy the code looks for the finished product. Let's start with the very basics. We're going to take the high point, where the blue line is the price by which an asset is purchased. The red line is your deviation level for your next purchase. In this case, 1% is my deviation. So each red line is 1% below the previous. The same holds true for your take profit, or the green line. This is 1% above the blue line, 1% above the previous, so forth. The deviation and the profit must be in parallel of each other in order for the equation to work properly. And more about that as we progress. But for now, trade cycles occur when the price action consumes all of the ladders that go down. Each tier goes down as part of a ladder. Each ladder adds to the accumulation. So as you see it going down, it is adding to the accumulation of the position. When it goes up, it is selling off that accumulation of the position with the profit that you've desired. For example, here to here is a 1% profit. Now this is on Kucoin, so my fees are 0.2%. So I'm making a 0.8% profit on this range. So let's enlarge this a little bit to get into the nitty-gritties. So here's my closing price for purchase, my deviation. So you'll notice that the closing price broke below the deviation, so a new purchase was made. And another purchase, and another purchase, and another purchase. And another purchase, and another purchase. However, here is a sell. And here you see an anchor line. These are important, and I'll get to them shortly. And then here you see another cell and another cell. So the ladder went up 3 levels. So I made 0.8% profit times 3, or roughly 2.4% profit after fees. Okay, now we're coming over here and we're going to go down and repurchase. So you begin to see the pattern of the sideways movement for the market. Now, in reality, the algorithm itself doesn't need all the extra graphics. It only tracks the entry point, the first selling point, and the first profit point. Excuse me, the first selling point, profit point, the first buying point. Now let's get over to here when you begin to see the anchor line itself. The anchor line is where the price itself can be sold off completely, meaning this is the point of entry, the point by which you need to obtain for maximum profitability. And now let's zoom out a little and let's keep going. Okay, here we begin a strong downward climb. You can see each tier beginning to add up and the blue line, or the cost basis, getting further and further away from the anchor line. Let's lock this in now. And then it begins climbing. And then it goes back down. And you see this process of give and take. Now, the first point that needs to be made is there are a lot of areas that you will not see profit. But it is there in a strange, silent way. And that is where this information comes in for the visual part. For the last 5 days, it has made over 300 purchases and over 300 sells. It has had 25 complete cycles. And the maximum depth of this ladder is 22 steps. Since we are using 1% as our framework, the maximum depth from the initial purchase price is 22%. Or if you're looking at a $10 position size, your maximum exposure would be $220. I say maximum as a relative term because this equation has an absolute maximum based upon the number of steps. If your deviation is 1%, your maximum is going to be 100 steps. This process is identical to the savings account. If you have a 2% deviation, your maximum is going to be 50 steps. So this only tells you how deep the accumulation cycle has gone within the last 5 days. I say accumulation cycle, but this isn't an accumulation recipe. The equations that drive this system work on a last in, first out basis for the mathematical representations of how you make your profits. And that is now what we're going to discuss. Where do you actually get your profits from? And the answer is quite surprising. Let's zoom out of this a little bit so that we can begin to see. Let's go back to the beginning of this cycle, which is right here. Actually, no, it's not. Back a little further. And while I'm getting there, I need to emphasize this approach works on the 1 second time frame. It is extremely aggressive. Now, TradingView will let you run it on different time frames, but that's not what the actual module runs on. The module itself runs specifically on 1 second and is extremely aggressive. It has to be to make the profits. Okay, so here is the beginning of the cycle. This is what starts everything, or level 1 of the ladder. Now, your profits do not come here at all. This is accumulation, no profit. Your profits come here. And you get no profits here on the upswing until you break the anchor line. These are profits because they're above the anchor line. These are accumulation as it's dropping below the anchor line. But the sideways motion, which makes up 70% of the market, that is where your profits come from. The constant up and down motion over time. That whipsaw or seesaw effect, that is what drives your profits. You capitalize through sideways movement of the market. Each selling marker is, in this case, 1% profit. Now, what TradingView can't do, that the Python program does do, is it sells in reverse, meaning it sells a little bit more than it purchases, and it watches the budget so that when your balance on the coin is less than the position amount, it resets the cycle. In essence, it literally resets the entire grid framework to a new pivot value when the balance of the asset is less than what you are purchasing. And that will be demonstrated slightly more effectively as we progress with the next stages. Okay, so no profit here, no profit here. Upswings don't do profits. They're just backwards or reversing the accumulations. You only profit when you go above the anchor or when you are sideways. Now, coins that are not very aggressive or very volatile aren't going to do well. They will work, but you won't see the kind of profitability that you would expect. Even though this is still just 1% boundary on the 1 second marker, you will see that there's not very much traffic and not very much depth. This recipe or module works best under extreme volatility. You want coins that are aggressive. The more aggressive they are, the more profitability they are. Coins that are typically stable, such as Bitcoin, Ether, or even ADA, may not necessarily move the market enough to actually get a good representation of volatility. Now I'm picking a different time frame to demonstrate visually what I'm talking about with respect to the context of volatility. Here is 18 days of trading, 125 sells. Now on Glitch, for 5 days of trading, it made over 300 sells. So these are the kinds of things that when you're looking at your coins, you want to look at coins that are very volatile. And you see that this has a much deeper ladder, 32 steps so far. Here is another coin, 600 sells, 65 steps in a ladder at this time frame. But for the actual module, this is what it sees. Again, this is what you want to look at. You want coins that are very volatile. Now let's go through a few coins and let's pick a higher time frame where the volatility is much more representative visually to get an idea of just what you are looking for. So when the savings account could potentially be stuck in this kind of a dead zone channel, Equilibrium is able to whip back and forth and take advantage of these profits by taking advantage and watching these steps. So as you progress with examining the market, high volatility coins are high profit, but also higher risk. Do not underestimate the aggressiveness of what this can do. It will wipe you out if you are not careful. Even though it is a fixed limit maximum based upon your deviation, that could still be extremely potent under the wrong situations. Because unlike every other module in the Jackrabbit suite, Equilibrium does not work on dollar amounts. When you use Equilibrium, you just can't say you want a position size of $10. That will not work. When you use Equilibrium, you use positions of lots. A lot is the minimum value the exchange will accept. And then your lot count is a sequence of that combination. So if you want the equivalent of $10 for an asset that has a minimum position size of $2.50, that would be 4 lots. The thinking in terms of how this process works is very difficult comparative to traditional thinking. And that is the process by which you must think when you use Equilibrium. Now here is a coin that is what I would consider the perfect place. A lot of sideways action. Sideways action is profitability. It is fairly far below the anchor line. And your current ladder count is 68 for a maximum. So for a $10 position, you are looking at $680 of exposure at this point. But you can see that it is fairly consistent for sideways channeling. That is perfect for the equilibrium algorithm. Now, deep drops like this are a problem. You don't make money here, but you do accumulate a lot. So coins that have this kind of a history, you need to be prepared for. Let's zoom this in a little more. When you really look at the chart, you don't really see that steepness when it's spread out. But when you see a run pattern like this, this is a deep accumulation cycle. While it does have some selling points, the selling points nowhere near balance out the purchasing points. So it is a very strong and aggressive accumulation. You don't make money on accumulation. Now, over the course of this coin with reverse trading, it would probably have burned off this accumulation, but you still need to be aware of it when you are trading it. Not all coins are good coins, unless you prepare explicitly for this type of a situation. Okay, now we've gone through a lot of the mumbo-jumbo rhetoric, and you're beginning to see the patterns and trends. Even though this is wrong significantly, it gives you the basics that this is partial grid combined with the savings account. So from here, we're going to move into the VPS, where I'm going to demonstrate a live trading, show you the results of several days. Okay, I am in my VPS, and this is a coin that I have used live trades on. Now, this is the ladder position, the direction of the trade, the purchase price, or the deviation part that my price needs to go below before a second purchase is made, the actual boundary of the ladder that my price is at when the purchase takes place for this ladder level, the price that has to occur in order to sell off this ladder. And you are selling off each position one by one. This is not DCA. This is not accumulation. It's one by one. So as you can see, a second purchase, I'm now at level 2. This number here is your anchor point. The anchor is where you started the whole process and where you must be above to clear any real profit. Although there are some exceptions to that. So here is level 2, level 3, level 4. So 4 purchases have been made, and as you can see, the price has gone down and the amount of accumulation has gone up. Level 3, and it cleared off the asset, which was a bug that got fixed. So for now, ignore this. Okay, then you see level 1, level 2, level 1. So you see how it's buying back and forth and zigzagging. Now let's get to my recents. Okay. Here is my most recent trading that made me $4 in 2 days. Very first position, I started out with $5. And you can see these numbers now are correct. This is my current holding. So here I have to buy. Here's the price I bought at. Here's where I sell. Level 2 purchase. And you can see 5.314. Well, I had to be below 5.319 for this purchase to take. So you begin to see this zigzag pattern. Now I need to be above 5.422 to sell and 5.2428 is when the sell took place, and I'm back at level 1 of the ladder. Level 2 purchase, level 3 purchase, back to level 2, and notice level 2 price. This is the most important and critical part about this algorithm. These levels are fixed based upon this first purchase. So every time it makes a first purchase of the cycle run, the level differences become fixed and locked in for the duration of the cycle. That is where the anchor line is so important. Is you need to be able to go above this to recalibrate the entire process and build a new cycle. So we're down to the first position, second, third, back to 2, and you see it here, 9, back down to 7. Then we're back up to 3, back down to 2. This is where we're making the profit, sideways. Okay, now 1, back up to 2, 3, 4, 5, 4, 5. A little more profit coming in there. 6, 7, 6. So again, 5, 6, 5, 6, 7. More profit. These sideways channels, this is where we do the profit. So we keep going up and down. Now we're starting to accumulate a little more, but you see pressure between the sideways of it going up and down. The tug of war between the bulls and the bears. Now we have an accumulation run. So 8 all the way down to 13 is an accumulation run. And now you see 12, 11, and 10. We're selling off what we purchased. And again, you can see the values, level 12, level 12. And you see how it's dropping from my accumulations. This is how this algorithm works in real time. These are real trades with real money. It looks strange and different from every other aspect of Jackrabbit TV. But this is really a very powerful algorithm. Now it does store files on the drive, and those files are listed in grid context. This is the value that is set at the beginning of the cycle, and every ladder down is the closing price plus this amount. So your closing price minus this amount is your buying price. Your closing price plus this amount is your selling price, and it tracks the ladder number. When the ladder number reaches 0, it recalibrates the grid. When the balance is less than the minimum amount the exchange will accept, it recalibrates the grid. Now let's show some real world operations. It's not very colorful. Here it is. Here is the last transaction I loaded from the file, and here's the command I used to run it. This has a launcher system, because if you don't pick up where you left off after system restart, it won't reload equilibrium. More about that as we progress, of course, but for now, this basic overview is just going to cover how it works. Okay. As you can see here, it shows that it made a sell. It's back down to level 9. And of course, Kucoin. This is where the last several updates have taken place in Relay to deal with these annoying issues. According to Kucoin support, the only way to make these disappear is to go purchase more IP addresses. At $5 an IP address, I can live with the noise. But now let's get into the log itself. And I'm going to go backwards. As you see, all of the noise Kucoin left behind. And there is a lot of it, and you see how it starts up. You will see this noise, so expect it. I am working on suppressing it more than it has been, but it is a problem nonetheless. You see here the standard relay format startup process, which brings us to the next point of the overall discussion of equilibrium. Each account you use equilibrium on needs to have at least 3 API secret combinations. Kucoin, for example, even with all of this noise, has 7 different API combinations. That is how aggressive this whole process is. So for my FTX account, for my Kraken account, I each have 3 APIs for both of those. This rotates your API secret on every API call. It is that aggressive. So you need to be aware of that before you start using it. Now this does have a paper mode, so you can test it without actually purchasing anything. But you must have your account credentials correct, even for the paper mode to work properly, because it does pull exchange data at the aggressive rate. Let's move past all this. Now, equilibrium does not make the trades on its own. It actually uses Jackrabbit relay to place those trades. So let's demonstrate that part next. So let's go to the Kucoin Log. And you see the actual Kucoin transactions, standard relay format. Now you can share the APIs between relay and equilibrium, or you can have equilibrium on a separate machine, or even with its own APIs separate from relay. That is up to you. But as you can see, here is the process. So for those who are wondering if relay works with Kucoin, yes, it does. You can still get the annoying 429 errors, but they are not as prevalent here as they are in equilibrium. And you will see the logs appropriate to any coin you trade. Equilibrium is the blueprint of how to build an application on top of relay and how to communicate to it through relay. That whole process really is quite simple. So there you can see all three coins I've traded with equilibrium, all three transactions. Clean and simple. This really completes this part of the process. And right now, equilibrium is not on the GitHub server. I wanted to put this video out first as a preview of it coming, to get the point across that a different thinking process is required. You have to think about your trading differently. And right now, only spot trading is allowed. Futures and perpetuals are not allowed because of the high risk this represents right now. Building this application has been very tedious and costly. The process of testing it has been very nasty. It does have a paper trader built into it now that it didn't as I was building it along the way. And I encourage you to use that paper trader, and I will be demonstrating that process very shortly as well. Okay, I now have all three of my exchanges up, and I am in my order history. I need to go through the way equilibrium records orders, because it does transcend into your order history of your exchange, and you have to read that history differently than you would normally. Once you see how the process works, it's not difficult to follow it, but you do have to realize what is going on when you look at your exchange history. So first, FTX trading TRX. Okay, the equilibrium process, tongue-tied there, uses last in, first out to connect the buy order with the sell order. So in this case, this sell order connects to this buy order. This is specifically because of the ladders. So this sell order connects to this buy order. Now the second sell order connects to the second buy order. This sell order connects to this buy order. The last sell order here connects to this buy order here. You can see the correlations by matching the price and knowing that in this case FTX has a 2% deviation, take profit. So each buy-sell correlation will be 2% difference. That is the reference point between how the orders work. So this order connects to this order. And it continues in such a way until you backtrack to the very first order of your ladder. So this is FTXUS and how it displays the correlations between buying and selling. And as you can see, this is a taker fee. You will pay taker fees on both sides. You will pay a taker fee for your sell orders, and you will pay a taker fee for your buy orders. So for FTXUS, you are going to be paying 0.8% in fees. Okay, now let's move on to Kraken. Not much different, except Kraken makes one thing more obvious between the sell orders and the buy orders. Here you see the buy order is for 4.0. Here you see the sell order is for 4.4. This is the reverse trading. Now, on the amount that I'm using on Kraken, I'm using 4 lots. So 4 lots of CRV. Each lot is given the price right here. So, and you see my balance will go up and down appropriate. So let's connect this here. Here's the sell order. Here's its corresponding buy order. This sell order and its corresponding buy order. Again, that ladder effect, those tiers, and that is incredibly important when you're trying to figure out how to read your history. Always remember last in, first out. Last in, first out. Once this order is off the books, this one becomes the last order in the equilibrium history. Therefore, it becomes the first out. And you go through that up and down in the depth of the ladder until it clears out the entire ladder, either by balance or by count. When either of those reaches 0 or below the minimum trading of the exchange, the ladder is reset. Now for Kucoin. Same thing you see, the buy at 1, the sell at 1.1. see the price, purchase price, selling price, sell, buy, sell, buy. Okay, this sell connects to this buy. This sell connects to this buy. This sell connects to this buy. This buy connects to this sell. 1.6405, 1.4709. You interconnect in such a way that you can follow that pattern. So as you're looking at your tiers, understand how that process works. And you can also see from my trading history how volatility plays a critical role. I'm going to stop here because I gave out a lot of theory. And that theory is probably going to take a few times going through to be able to understand all of the details of the abstract of what equilibrium is. Equilibrium is not online yet. I wanted to give the abstract and the theory of it first. That way, once there's enough information available, when I do put it online, it will make it easier to make informed decisions on how to use it. Equilibrium must be used with care. If you don't, it will wreck you. It has the potential to become very aggressive. You could, if you have a low enough fee rate on an exchange, literally have a deviation of 0.3%. Kucoin and Binance will allow this. And as you can see, 2,800 sales. Now, even though you're not going to be making a lot per trade, the overall impact of 2,813 sell-offs at a 0.1% profit is going to be quite significant. So it does have the potential to really go extreme. Next time, I will demonstrate the paper trading process. I will also demonstrate the setup process. For now, I'm going to stop here. Be sure to ask any questions regarding the theory in the support area, and I have a feeling I will probably set up a separate area just for equilibrium, because it is such a different process altogether. The one thing I cannot underscore enough, you must change your thinking process when it comes to reading your order book and planning your assets. Equilibrium does not follow any of the traditional Jackrabbit TV paradigms. Until next time.